Hi, I am Anna. I come from www.ntvforex.com. Risk sentiment on U.S. stock markets remain the key market driver. Analysis http ntvforex.com News ID 4EFA 149112026 53:32 AM. Market spotlights were on EUR USD yesterday, but it was EUR GBP that turned out to be star of the show. EUR GBP sprinted from a 0.9078 open to a 0.9226 close, taking out 0.9176 0.9184 resistance. June top 62% retracement from March-April rally. From a technical point of view, EUR 0.9307 pounds sterling 0.93252017 TOP 2019 top offer final intermediate resistance before retracing to the multi-year high reached at the beginning of this year 0.95. Yesterday's rally was a three-phased one, initiated earlier this week by UK PM Jones's high-stakes Brexit gamble to rewrite part of the EU-UK withdrawal agreement in case both parties fail to agree a trade deal by the end of the year. Irish PM Varadkar castigated the kamikaze move, warning that a hard Brexit at this stage becomes the most likely outcome of deadlocked negotiations. Euro strength took over from sterling weakness in a second phase after rumours that the ECB wouldn't overreact to euro gains. The carefully timed rumours hit the screens within the space of 1 minute after ECB President Lagarde started her press conference. They immediately dismantled a potential explosive subject in the hands of a clumsy communicator. Markets afterwards didn't bother about subtle changes to GDP inflation forecasts or Lagarde's notion to completely use the A1.35 TN PEP envelope. By default, euro strength pushed EUR USD to an intraday high above 1.19 in the wake of Lagarde's QMA session. Yesterday's final push in EUR GBP's back came from a turn in global risk sentiment. U.S. stock markets couldn't build on a decent open and turned south, dragged lower by tech stocks. Main indices eventually lost 1.5% Dow to 2% Nasdaq. Risk aversion weighs on sterling against other majors. The U-turn on stock markets triggered a similar U-turn in EUR USD, with the pair eventually closing near opening levels at 1.1815. Yesterday's combination of early sterling weakness and late dollar strength sent cable GBP USD to big figures lower 1.28 from 1.30. US Treasuries outperformed German bonds in the final stages of dealings. The end of this week's all-in-all decently digested US supply played as well. The U.S. yield curve bull flattened with yields shedding 0.8 bps 2-year to 3.8 bps 30-year. German yields added 1.7 bps 30-year to 3 bps 10-year. They were already trending higher and the inaction at the ECB meeting gave an additional push. 10-year yield spread changes vs Germany narrowed by up to 5 bps Greece Italy. Asian stock markets trade mixed this morning with Japan outperforming. The frontrunner in PMA's succession race backtracked on the need for an additional sales tax hike. U.S. Democrats shot down a skinny Republican fiscal support bill in Senate, but that had been coming. Today's echo calendar contains U.S. CPI inflation and speeches by ECB heavyweights Weidman and Lane. U.S. inflation numbers lost relevance since the Fed moved to average inflation targeting and as long as they remain below 2%. Possible ECB comments on FX remain a wild card, though less likely after yesterday. We think that risk sentiment on U.S. stock markets will remain the key market driver. Technical charts suggest that the correction isn't over yet. If so, U.S. Treasuries and the U.S. dollar could profit in the short run. Ahead of the weekend, we thus advise to err on the side of caution. News headlines: chances of a new U.S. stimulus program have further declined. The U.S. Senate rejected to advance to the floor a bill introduced by the Republicans. The bill estimated $500 billion was a slimmed-down package compared to an earlier proposal of the Republican Party $1 trillion. The Democrats rejected the bill as being too small and continue to support their proposal estimated to be worth $2.20 billion. Yoshihide Suga, who is the frontrunner to replace Shinzo Abe as the next Japanese Prime Minister, changed his view on the need for a further sales tax hike. Earlier he said that a further increase would be inevitable given the country's aging population. However, now he joins Shinzo Abe's view that there is no need for another hike in the next decade. Abe raised the sales tax in October last year, but the economy has contracted in every quarter since then. Download the full Sunrise Market commentary. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.